So let's just go over this real quick. The risk monitor is still red. The ridiculous rally yesterday, which by the way was an hour and 15 minutes. The market ripped about 3% higher in about an hour and 15 minutes. All of which was erased in the first probably hour and a half of trading yesterday. Okay. What I said to you yesterday morning during this morning meeting and what I wrote in the captain's note, I think we should go take a peek at again, right? Because this is what I said yesterday. The Fed news was incredibly hawkish. They pretended on CNBC et al., whatever financial network you want, because they're all cheerleaders. They pretended that it was less hawkish. And that's why the market's going up. Yay, maybe this is the start of a bull market, okay? And what I said to you at the time was, there's nothing less hawkish about that meeting, okay? It was terrible. The Fed's behind the curve. The Fed has no idea if they'll be able to get ahead of the curve without crashing the economy. And they put out there these comments of, we'll have a soft landing. Yeah, right. I've never seen it, right? There's never been soft landing. Those are myths, okay? Those are myths. So, excuse me, everybody knows that. But the Fed makes these comments. CNBC picks up on it and says, hey, this is great. The whole market rips higher. What we know that the market ripped higher because volatility got sold. And we talked about that. Spot Gamma was real helpful about that. They said, look, right after the event, usually vol gets sold. If nothing terrible is at the event, vol gets sold, markets go up. That's exactly the trade. And I said yesterday morning, that's got nothing to do with the bear market that we're in. It doesn't change the risk monitor. It was an hour and a half rally, hour and 15-minute rally because volatility got sold. You couldn't get a more hawkish Fed. So yesterday, while I went into the day willing to get long the market, I said to you guys, look, hey, I could be wrong. My opinion is that was the most hawkish thing I've ever heard, and it's going to be ugly as the Fed tries to get ahead of inflation. It's going to be a long, lonely road, right? But I don't force my will on the market. So I come into the day yesterday, I say, okay, huge up, last hour and a half up. I'm going to go out there, I'm going to look long, right? We didn't get any long opportunities on the desk all day. No, actually, we got one little one, which we actually made money on, okay? And what we did instead was we took a position in VIX again, right? And by the end of the day, we were making money in VIX. And we held that overnight, okay? So we have our core position on VIX again. The market is going to stumble and lurch from one economic news release number to another. Today, it's the jobs report. Tomorrow or next week, it'll be another report. Depending on what the numbers are, people are going to try to figure out, will the Fed raise 75 basis points? Will they raise 50? Don't get lost in the bark of the tree. Just step back and look at the forest. The forest is on fire. That's what's happening. The forest is on fire. And sometimes you get caught in the little minutia. Well, maybe it's up a little bit. Maybe this, maybe that. No. Very simple. Fed reducing liquidity. Markets don't do well. Period. So what I said yesterday also was this is a swing trading market. It's not that you can't get in there and make some money. If you're savvy enough to put a trade on and get paid on it quickly, book some profits at targets, raise your stop at the very least to break even, so you're not cutting into principal. And at the most aggressive, I would use probably the 14-day moving average as my raised trailed stop, okay? On a stock that I get right and starts to run. I'll give you an example of that. Here's the head and shoulders pattern of the market. That just looks god-awful. And the Fed didn't do anything to make that pattern look anything even remotely positive. Okay, look at the volume on spiders yesterday. Just blow out negative volume. But let's just take a look at MP, for instance, a stock we traded, perfectly. I may be so arrogant as to say that, but in this particular case, it's not arrogant if it's true. We bought it here, it ripped higher, we sold it on that day as it came down. So in this case, we actually used the move up towards the fourth standard deviation above the 200-day as our target. And then we looked at a consolidation, and the big down bar got us out, and the whole thing cratered. All right. Let's take a look at UEC. This is an example. Okay. So, we caught it here. It blew out. Then it had this 3-bar reversal, big up bar, and then a huge down bar reversing it. That was it. Had to be out. And then right here, this blue line is the 14-day moving average. Oh, God, sorry, guys. So coming through the blue line is the best place to stop something out. So if I was, let's say, on Livent, for instance, this thing looks great. We're going to do research on this today. We're looking for a 4-bar, consolidation pattern. So yesterday was 1. Monday, Tuesday, Wednesday will be 2, 3. And then 4, we'll look to see if we want to buy a high tight pennant. But we'll use the tight pennant as our stop. It comes down out of it, we'll be gone. If it wants to rip higher, great. And if it comes up towards the fourth standard deviation above the 200-day, we'll book profits and move to the next idea. Okay? So those are my thoughts for today. I'm absolutely beat from this COVID thing. So it takes a lot out of me to get excited about these things. So I'm going to cut it right here and just say I'll see you guys on the live trading desk. We'll be looking really our number one trade that I look for every day, since we're like 90% cash and VIX, is to be long the indexes. So just like yesterday, when I came into the day looking for a trade on the S&P, I was willing to, this is the S&P right here on day trading screen, right? Okay. I was looking to put a trade on. So when it sold off all day, now I got tons of alpha because I got so much cash in the portfolio. It makes a double bottom buy signal a no-brainer. Put that trade on. It rallied up. We booked some profits up here, raised our stop to break even, got out with a tiny profit. The thing went lower. But on one of these days, this thing will reverse and go skyrocket, and we'll be on it. That's the trade. That's the number one trade I'm looking for every day because it balances my portfolio, which is obviously very bearish because I'm carrying tons of cash and VIX. All right? Okay, guys, I'll see you on the virtual hedge fund trading floor. I love you guys down there. It's so much fun working together, and I can't wait to get on it again.